Supply, where are we at? This is just look at this visually, and this dotted line is the long-term average of supply, and it's just simply looking at the amount of houses on the market based on the time it takes to sell. And we can talk about that calculation method. It's not us that's doing it, it's realestate.co.nz. But the picture is look at what supply there is, which is the blue part, and how low it is compared to the historical average. So house sales volumes have not kept up because we don't have the level of supply to meet demand. And we've got some specifics around the cities, so you can see that Waikato's 17, it's really low in areas. The flip side is that consents issuance has gone up. So we've seen building consents growing and get into a level where potentially it could meet demand, but actually later on we'll see it won't. Remember that you can't live in a consent. So even if I don't know, a developer like Todd Property goes and gets 100 apartments consented, it doesn't mean that they're going to build them, because then they turn around and say, well, what's it going to cost? Oh, gosh, building costs are ridiculously high. I think we might pause. So a building consent does not mean a built house. That's really important. So when you hear building consents are rising, dig down and find out how has that translated into new stock. So construction costs just go up and up and up. There was an article recently that said US construction costs are about 40% cheaper, in Australia are about 30% cheaper. We've got a few monopolies or duopolies here. That means that there's not a lot of competition. It's just ridiculously expensive.
Just really, I think it's important to look at the escalation of our costs, roughly around 7, close to 8% per annum in terms of construction costs. So we look at sort of the inflation of that relative to other things. It's considerable, and that is having that, along with labour availability, is having a considerable impact in what goes from the consent phase to being built. What we've got is we do have some sort of pockets in the market that are being built that are being well attended to in terms of the lower end of the market. We've got Kiwi builds, we've got the government trying to contribute to that. Those of you who are Kiwis, and particularly those of you who are onshore, will appreciate that the whole Kiwi build thing is a bit of a shambles, and targets, we know we're close to meeting targets, but nevertheless the government is looking to support that end of the market. Then we've got the higher end of the market, over the $1 million plus, I'm talking just residential here, is also being well looked after, because the margins there for construction are good. What we've got in the 700 to sort of 1.1, 1.2, that market is not being well catered for. So it's good to kind of just have a little bit of insight into the slice and dice of that, because we are going to have supply constraint, particularly in that sort of price point. That's not just in Auckland, that is across the country, and that's probably, if it something that will just continue to escalate if we don't get some change to either the cost structure, and of course we've also got labour there as well, which is not confined to that point in the market, mostly construction costs and margins for developers in that sort of 700 to 1.1 space.
Thanks. Okay, let's keep going now. Regions, steady, yes and no. Yeah, they're steady. But steady is in the sense that we've seen a lot of overflow and from Auckland. So Auckland demand has spilled over to Hamilton, and we've also seen that in Hastings and Napier. Wellington, not so much. Christchurch, Queenstown, absolutely. Wanaka, Cromwell. There's some areas that have definitely experienced a bit of a surge. And I think historically, if we went back 10 years, we said don't touch the regions because they just don't have a strong enough economic story. And we're now getting some confidence around some of those regions, because people are seeing that some businesses are saying, well, we can let people operate from a branch down there. So there might be software developers that an article recently that where a software development firm took a poll from its employees, and they said we'd like to have the option to have an office in Hastings or Napier, and they've done that. So there is that kind of remote working ability. So that's we're starting to see that starting to happen. Regional growth, it's just really interesting how, and this supports it. So Auckland at the moment has slid sideways, but then we've seen other cities really grow, and our sense though is that that's going to start to taper off. So the demand drivers that have impacted demand in Auckland are probably going to start to hit those regions. Auckland rental market, not much happening now, but we have seen growth. But I think if supply continues to be constrained, we'll start to see that grow again. So that's demand and supply, and the overall picture, the overall story for demand and supply is that we see demand being far greater than supply. It's just that some of that demand, or a lot of that demand at the moment, can't express itself. So that's why the market is stalled, it's stagnant. We don't think the Auckland market's going to go backwards significantly because the fundamentals are really strong. And Lisa, just your quick comment on that foundation. Do you concur that the foundation is strong, or what's your view?
Yeah, I do, and I think that what it always come back to is just an assessment of those fundamentals. So, I'm talking to clients every week that are looking to invest in. What I say is that we need to have a long-term story to look at. We need to have a long-term story for New Zealand, and we also need to have a long-term story for the location that we're looking to invest in. So the first thing is we need to look at the economy and say, what's the economy doing? Our economy is really really sound. We've got a strong labour market. The housing market is still sound, so yes, it's a little bit quieter than it has been. Consumer confidence is, while not at all-time high, it is still solid, and we've got low unemployment, and our economic forecast in terms of growth is good. So that's the first thing that we need to understand is where is the country at, and then we need to sort of put ourselves through all those filters that Alan has sort of gone through. And the sum up of that is that the fundamentals in the market are sound, and when we look at what is taking the activity out of the market, it's really important that we actually look at what that is. So for New Zealand recently, the banking changes have made a significant impact. And also when we have a look at the Australian market, that is obviously getting a lot of media attention, and that again is a result of some big changes around banking. So really important that when we look at stats, look at softening in markets, that we really understand what it is, because that will help us to assess whether it's short-term, long-term, just or blip on the radar. So yes, I do think that the fundamentals are really sound, and I guess just to add to the regional Auckland conversation, we have got some growth that's coming through. So when we have a look at sales growth over the last 3 months, we look at that year on year, we do have growth. Now, to be fair, that growth is weighted towards the regions, and Auckland is just slightly below. What we are seeing is that growth in the regions is starting to taper off and slow down, and I think that's important when we have a look at sort of cyclical activity. So Auckland's been going through about a 4-year sort of rapid growth phase since sort of 2014. It's really started to spike, and then the Auckland sort of started to quieten down, and the regions have taken off. Now the regions are starting to do their own tapering, which then sort of brings us back to that long-term story for Auckland, because people, what people do say is, well, at the moment the Auckland market is really quiet, it's not growing. What do we say about Auckland? I think we've just got to remember that the greater population growth is in Auckland, our greater economic growth, land and bureaucratic constraints create demand. Auckland is holding on to the young people when the regions can't. We're attracting the foreign buyers in Auckland. So there's a whole lot of things there that are adding to the story for Auckland. So for those of you that are listening, that are sort of looking at the stats and going, look, maybe the regions are a better place to go, again, just take a pause and sort of try and get that in perspective. I still think that while there are some regions that are developing long-term, have got some great long-term stories, that's not going to apply to all. For those of you who are wondering about Auckland, no need to panic.
Yeah, so there's a question that's come in on the Q&A. So proportionally, it seems that there was a lot of construction work in Queenstown with the increased supply. With this on top of foreign ownership ban, what impact do you think this will have on the medium-term property prices in the area? Do you also expect there to be a short-term dip in prices, as there must be a drop in demand given the mix of factors in play?
Thanks. Just keep in mind what is demand relative to supply at the moment. Huge amount of demand. People are struggling to get rentals all the time. We hear about businesses where they'll offer a job to people for Queenstown, and then they try and find a house to live, and they can't, and they decline the job offer. So from a residential long-term housing perspective, not a big deal. The tourism sector, No, it's not foreign buy ownership. Look, the money, it doesn't stop people buying. It's only residential property, so no restriction on farms. But then they've got to go through the OIO, and people with enough money are going to be able to buy anyway. So it doesn't impact commercial property at all, and so not seeing it as a big deal. Tourism, I think the bigger thing to worry about there would be Jacinda and Huawei and China getting upset with us, and that's a bigger concern if that was to hang around long term. But that's like, is that going to really happen long term? If Jacinda lets that become terminal, surely she'll be out of office quicker than a rat up a drain pipe, and then National come in and reverse that and try and amend. I don't know, but anyway, okay.